Welcome to another stream here on the channel. We survived another day in the market. The S&P 500 did very well, up 0.8%. Still a little bit away from the 7K mark. The Dow Jones up 0.6%, still a little under the 50K mark. And the Nasdaq had an amazing day, up 1.26%. Overall, a very solid day. Crypto had an amazing day today with Bitcoin up 7.7%, XRP up 8%. Really solid day after many days of blood. So to all the crypto holders, congrats. Maybe that's the bottom, maybe not. We will see over the next months how this all plays out. Metals had a solid day as well. Gold dead flat, silver giving back a little bit above the $90 marks at the start of the day, but now at 88, up only 1.8%. Copper defending that $6 line like its life is depending on it. Platinum with an amazing day, up 4.8%, still giving back a little bit of the gains we made during the day. Palladium dead flat as well. Oil flat. Natural gas up 1.8%. It's doing fine. So overall, the markets did well. Metals could have done a little bit better. And crypto just had an amazing day. My own portfolio are mostly junior miners, so depending on the metal space. I ended up with a gain of $2,800 euros. My bad. I say always dollars because everything is in dollars. Up 2.3%. A little bit shy of the $125,000 mark. My biggest gainer was PGE.V, Stillwater Critical Minerals. It's a junior miner that's developing a source of palladium, platinum, nickel. So the metals that did really well. And today we have another a guest again. Cosmos Agrogos Capital is returning for another session. We will talk about the
Hey,
market. Hey man, how is it going?
how good on you, bro? How you been?
I had a great day. Like I said, up
Yeah.
2.8% or so. Really solid.
Damn, dude, that must be nice, especially for your portfolio.
Yeah, metals are doing well. I'm a little bit shy of an all-time high. My all-time high was like 130k, 140k, something like that. So a little bit shy of that, but year to date I'm licking on that up 20% mark again, so it's all good here.
Hey, congrats, bro. Congrats. Yeah, today I had a good day as well. I'm up about 1.7%, which obviously I have a much smaller portfolio, but yeah, the crypto really helped me out today. The crypto was moving. Kind of came out of nowhere. Actually, this entire week I was like, oh, I'm just gonna be losing money this week, but it's actually been pretty good. Like Monday and Tuesday, I was like, oh, it's gonna be bloody red, and it kind of was, but it still kind of bounced back. So
Yeah, but this week all eyes on Nvidia. If they don't deliver in those aftermarkets, we are screwed. Like everything is depending on them, and I hope really that they have good earnings for everyone that's invested in the metal space. Oh no, not in the metal
Yeah.
space, but in the tech space, because everything is dependent on it, and if they crack, the market will crack hard. So I hope they do well.
Well, they're releasing earnings today, right? It's today.
Yeah, after the market.
Oh, okay, so yeah, because I just pulled it up. I see their after hours is moving. Got a lot of volume going, so people are amped. People are excited.
Yeah, not sure if the numbers are out already, but all eyes on Nvidia.
Yeah, and I don't think they've. I think they do it about an hour afterwards,
Yeah, not really
or
sure when they are doing it exactly, but tomorrow I will know for sure when I wake up, because X will be flooded with posts about it. Do you have any exposure to Nvidia, or are you not exposed to it?
I'm I do have I have a SaaS tech sector slash AI. Like the company I'm in is kind of muddled. It's a bit of everything right now. So, but it's a basically just a tech company. So if my thoughts on it are basically if Nvidia does well or if tech does well, then you probably get a little bit of a pull within the market. So um, I don't have any direct exposure like with a ticker or with like how do you say distributing all the data and all that type of stuff. I don't have any direct connection to Nvidia, so I don't really care that much as long as it like as long as my ticker goes up and is impacted like positively.
Yeah, I don't think most people have direct exposure, but the big chunk of people have it indirectly. Um, as most of the people are invested in the ETFs, and Nvidia is just such a massive chunk of it. So even people just investing into their like 401k or so, they have such an immense amount of money in Nvidia that it's actually crazy how much people are exposed to it and they don't even know it.
Yeah, this is kind of my thing about Nvidia. Um, I do think Nvidia is incredibly overvalued. I do think their accounting practices are pretty bad. It was pretty obvious already about a year and a half ago. I know like Michael Burry and a couple others have been talking about it, but there were some early whistleblowers that I did some DD on what they were talking about. So that was about a year and a half ago. So I think even longer, maybe two. I really don't trust Nvidia as in regards to the valuation. I do think it's an important stock. I think the weight it has within the S&P really important. I also think that just sort of the overall industry and the way the future is going, it's really important. So it's important in all of those aspects, but I think the actual direct accounting of the company is very suspicious, and um, I am very hesitant to buy any direct exposure to the company. So
Yeah, I saw something like that as well. Like, I think the argument was that they are pushing money into companies that are buying stuff from them, and then those companies use the money that they gave them to buy chips and to make all those capex things, um, to push them higher. But
yeah,
that comes back to the argument of the whole market, the whole AI market. It's all just companies pushing each other higher. So it's like $1 or $2 trillion that it's getting pushed around. So Nvidia invests into AMD, and then AMD invests into OpenAI, and OpenAI makes an order for chips and Nvidia again, and then Nvidia puts it again into I don't
yeah,
know, Meta.
it's a very centralized sort of um, not stake a supply chain. It's a very centralized supply chain. Um, the main thing, not necessarily with the company of Nvidia, like that it's going to go under. It's more of just the valuation. So what you're describing there is known as round tripping, because Nvidia is heavily valued, leaning into forward earnings and forward revenue. Um, Basically, what a lot of these early stage investors do is they set up companies, then they make those orders. But the thing is that Nvidia has such a demand on their orders that basically what happens is that they don't even deliver the product to the company that is making the order, the ghost company. Um, Basically, they're not delivering the orders, but they're making the orders, which drives up the value of the chips. Simultaneously, it also drives up the forward earnings, right? Because how do you say, if you buy, I don't know, like just for an example, if you buy $10 billion worth of chips, well, the market values that as like an extra 100 to 200 billion dollars in market cap. So the it takes very little capital to expand the current valuation that we're seeing on the direct market. So it's one of the main reasons I'm very hesitant to get into it. It's something very similar to PLTR. I was an early investor in PLTR. I bought my first shares at $7 and my core position at $20. So um, and I like PLTR. I think PLTR in regards to the actual fundamentals is good. It's just again, it comes back down to if you have a shift within market, if you have a credit crunch, deflation, any of these sort of headwinds within the market, then you're not going to be losing 40%. You're going to be losing 80% very quickly. And
No, yeah.
I think that there's better investments out there that I can double my money on. Because right now the market cap's at $4.75 trillion. So
Yeah, I agree fully with Nvidia that it's a little overvalued and all, because most people don't really realize, but most sectors are cyclical, and like chips, they are not an exception of that. Like you build a lot of supply, then you're making a lot of chips, and the price of the chips goes down again. Then you stop making supply. uh, the new generations come out, and you don't build enough supply, and then you need to build all that supply again, and so on and so forth. Like we have seen a couple of those tech cycles over the years, over the decades, and they will continue to exist. Like everything, nearly everything is cyclical. Like I'm not even sure if there are sectors that are not cyclical. Like there are probably like sectors that are not as cyclical as others. Like the metal market, it's super cyclical, and those things play out very accurately. But the tech sector, it's not as cyclical, but it still follows those rules, and we will see another downturn of it when the capex slows down. Companies don't decide to put like 200 billion in tech and 100 billion in tech when they are a little bit more cautious. That will be the down of the.
yeah, I put probably again I lean very heavily into valuations and just in regards to basics, like just for buying opportunity wise, right? Because right now anytime you buy Nvidia, like sure you're going to be riding that wave in regards to cash and all that type of stuff, so I'm not criticizing it on that side of it, but the main thing that I'm more focusing on is like the future development of that price, right? The value that Nvidia displays is leveraged based off of future valuation, which again I can understand within the market, but I would much rather ride the wave of that price discovery than bet on top of that price action. So I would say Nvidia is probably worth around $90 a share. if you do base value and we're able to make money off of the sort of this reconsolidation, which we've seen it drop from 150 to 90 before. So it's one, and we've seen it trade sideways pretty much for getting on now to about 6 months. So for about half a year, it's traded sideways, and it seems like it would definitely be okay retesting that sort of 90 to $120 range in regards to direct value. So I just don't see the opportunity in the actual portfolio. So, but speaking with the sort of the cycles, I also completely agree with that. I think it's also just there's other cycles out there that I think are a lot more attractive and that there's a much more upside, which we both agree is one of them's metals. I think other parts of the tech sector very undervalued. Um, so
Yeah. Um, when you are looking for the upside, it's not really there in tech, in my opinion. But the funny thing about all the cyclicality and upside and downside is Nvidia fell like 60% in 2022. It was like, I think the low was at like $100 pre split when they um when they bottomed or something around there, and from then on they just went up all the way to the valuation they are at now. But they had a pretty impressive drop, like 60%, and they did it with no. Uh, they did it pretty easily. They had no real stop in it. They dropped for the whole 2022, and the valuation really took a hit. But it was overall all in tech that was dropping hard. So when we have talked about it last time, most of the stuff we see is driven not by price or not by valuation, but purely by sentiment. And when sentiment drops, stocks can easily drop 60%, 80%, or whatever the term is. And that's also part of the cycle, like the emotional cycle.
yeah, so I mean, you're kind of touching on like sort of. I think we both focus a lot on narratives and the value of
Yeah.
narratives in regards to the market. I think a lot of investors they ask the wrong questions when building a specific portfolio, right? Like the dividend portfolio that I show people, right? People like I've had a couple of comments where I shared the data in regards to my yield on the dividends, which because I have crypto in the account, my yield's around 3.5%, 3.6 with yield on cost building. So, and I get a lot of criticisms from like other dividend investors, and also some crypto holders who are like, why do you have crypto in a dividend account? And then the dividend investors will be like, well, that's such a low yield. Like, why don't you put it into a higher yield asset like bonds return more than that? And I would say, well, again, it kind of depends on how I answer the actual question that I'm asking. And I kind of made a post about this earlier in the week, which is I'm not trying to make money off of the principal. I'm not trying to grow the value of the account per se. I'm trying to grow the total actual dividend income. So my concern is on the longevity and sustainability of dividend payments and dividend growth. So that's my actual focus when trying to build the account. Now, if you were to ask me about my value account, then the question that I'm asking there is, okay, what narrative has the greatest return in the shortest amount of time, right? So like when I bought silver, like even though I was thinking like probably like a 3 to 5 year time span, it started picking up probably about 2 years in. But I'm thinking, okay, well, based off of everything I know and sort of the future problems that the world's going to be running into, that it's probably going to be at least anywhere from a 5 to 10 to potentially 20x, um, sort of on my initial investment, especially within the market or at the level that I'm buying within the market. So my actual return on the narrative that I'm investing is pretty high. Now I know a guy in one of the previous trading communities where he uh, he bought Nvidia back in like 2004, 2005, and continued adding it to his investment portfolio. So when Nvidia started launching up and when they started doing the splits, like he turned a very modest investment into like he could instantly retire. Like and he was an older gentleman. He also owned a computer repair shop that he business. So he was a lot more in tune with sort of the dynamics of the actual hardware for technology and sort of how the future was developing in that regards. So, but how do you say at that age, I was legitimately about 5 years old. I didn't even
Yeah.
know what the stock market was at that time. So that on a sort of opportunity cost is just something that I don't even want to think about because the return is just impossible. And I think a lot of investors, you see this a lot, especially in the dividend community, where they'll be talking about companies like Amazon, for example. Like there's this one guy out there who he like loves Amazon, and I tell him like, dude, Amazon's overvalued, and he goes, how is that possible? Like they're growing their certain portions of the revenue, they're growing at almost 20-25% a year, and I go, it's like, yeah, no, that's great, but how do you say you're like unless if you're constantly playing options and you have the sort of um, so the distribution of value sort of locked down, right? Like you're only going to be making a certain percent every year.
Yeah.
And now, if you had bought that 10 years ago, sure. Like, but the guy is like 22 years old. So when Amazon drops 10-20% within like I don't know, a couple of weeks, he's like, well, I'm year to date, I'm down 20% on the portfolio. And I'm like, well, I'm still, what am I up currently on the dividend account? I'm up about 4%. So, and like, sure, Amazon can potentially shoot back up, but you never know. So,
Yeah, that comes back to the point of what do you even want from your portfolio? Like, if I want 10% a year and I'm fine with that because I know I want to go to 5 million and I can put in 100k a year, I don't need to risk and I'm still fine with my life, then that's completely fine to invest in something like Amazon, Google, or just put it into VOO or whatever ETF you want, because it will provide that return probably over those years and bring you to your goal. But if your goal is to make as much money as possible, you probably can't really go with these large caps that had their run and are now in a stage where they will provide a nice return, but nothing shockingly like they did over the years and years they had grown from a small cap to a mid cap and then to the large cap they are now. And that's also like with Bitcoin or so, and people say, "Oh, wow, look at the returns, and it will do the same again next year." Yeah, but you need to know that it was like $100 market cap when it started, or $1,000 market cap when it started, and now it's like $1 trillion market cap. That's not really doing a 10,000% return again, like it's nothing.
yeah, no, I would say that, uh, like, if you go into Webull, right, and you look at, like, I use Webull, sort of I don't know. I like Weeble's sort of UI. So
Yeah,
like
it's cool.
Robinhood is good, but I like Weeble's UI. But if you look at Weeble, like at least on the desktop, I don't like anything in regards to the market. I don't like using my phone for because I need to feel like I have everything displayed at the same time.
Is it
But
like
if you
big
go
purchases
ahead.
need big screens? Like
Yeah, yeah,
if
no,
I
straight up. Like I know that's a meme, but yeah, yeah, straight up. But there's I mean, yeah, like big decisions, stuff like that. But so if you go into Webull and you look at the display, so if I click on NVIDIA, it'll display all of these metrics: volume, market cap, percent turnover, 52-week low, percent range, PE ratio, PS, EPS, dividend yield, shares outstanding, next earnings, X date, high, open, low, previous close, average volume, 52-week high, turnover, PE, PB, PBS, um, dividend, free float, market cap, free float, right? If you look at all of that, right, and you go down each of those metrics, you have to study and understand why, like, companies, why websites, why hedge funds, why banks, why they all look at these metrics, right? Because these are metrics that people have been using for better part of a century. I would argue probably longer than that, probably a couple thousand years. That these metrics are useful for specific purposes and answering specific questions. And a lot of people, they'll look at the price and they go, well, or they look at the company and then they look at the price and they go, well, Nvidia is worth $200. So that, I mean, Nvidia should surely double. It's like, okay, but if I look at the market cap, that means Nvidia has to go up $5 trillion. It's like in value, at least, right? Which requires at least, I don't know, just guessing, probably anywhere from 10 to 4, or sorry, anywhere from 100 to 400 billion dollars worth of liquidity. So when you're investing, you have to be very specific in the questions that you're asking and how you're answering them, right? And a really good course, and this is something kind of that we talked about last time, sort of in my history at least, is like, I think, if you haven't, try day trading for like a year, even if you don't take it super seriously. Like, day trading will get you to ask very specific questions about what the market is doing, and even though you might not necessarily return a profit day in and day out from day trading or options trading or futures trading, whatever sort of real time investing that you're doing or trading that you're doing, that can carry over to investing. And there's a lot of ignorance on the market, or at least not even ignorance on the market, but I would say a lack of willingness to ask, like, questions, answer them, and ask even deeper questions. And you don't necessarily do that by like doing research. You do that by, like, taking positions on the market and seeing how the market reacts based off of the idea that you have, right? And then when it moves up or down, you then try to figure out, okay, well, I bought here, it went down here. Let me look at all the metrics, everything involved: volume, earnings, news, distribution, all of that type of stuff, right? Levels, technical analysis. If you take all that into consideration, then the way that you not only like figure out why you're down on that position, but also simultaneously, it gives you the opportunity to better interpret how you're going to take a position in the future.
Yeah, I kind of agree, but in my mind, day trading is a little bit more short term and not really valuation oriented. Like, you look at algos trading and stuff like that. But for me, valuation really comes down to, do you even know what would you pay for the whole company? Like, most people, they look at shares and then they're like, hey, that's cheap or that's expensive based on the stock is up or the stock is down. But they don't really look at it with, look at how much would I pay personally to acquire this whole company. They are just looking at, oh, prices are down, prices are up, and that's it. But if they really
Yeah,
needed to, like, buy the company, they would have no clue how much it's actually worth. Like, does it need a
well,
year to be paid off? Does it need a decade to be paid off? Because, like, some companies, they need 100 years to be paid off.
Yeah, Tesla and Amazon are currently sitting at quarter of a millennium, so around 250
It's
years.
crazy to see those numbers, and no idea how that's even possible. Like another good example is Oklo, the uranium company. They don't even have revenue. Like they have nothing, and they are worth billions of dollars, and it would take forever because they don't make money to make money on that investment if you buy the company. It makes
Yeah,
no
yeah,
sense to
no.
me.
Well, I again, and I'm just using day trading as an example, but I like if you look at the market, if you look at the charts, like I made a post about this a while ago, where once you understand that the candles that you see when looking at charts are a very limited uh, sort of scope in regards to analyzing value, that's the moment that or that yeah, that's the moment you will very quickly realize that that's all fake. Like I would argue the best way to view the market is like a round table. And in the round table, instead of like 13 people, there's about, I don't know, depending on the stock, anywhere from 100 to 20,000 people all communicating and talking, right? If you look at the early if you look up like stock market in the 1910s, 1920s, right? All that trading was literally done out like there would be people standing in the windows and they'd be like throwing hand signals at each other, right? So basically, what you're really doing is that you're basically having like a very complicated conversation, and different people are viewing the market at different time frames. They're looking at different sets of data. They're interpreting data in different, like the same data in different ways, right? For different time frames, all that type of stuff. So like you have to understand that you're basically jumping into an ocean when you're looking at the value of a company, right? I mean, some conversations are like ponds. It's very small, so it's a lot easier to direct the narrative. Like, there's a couple of companies where I've bought and I've like on Twitter, like I'll make tweets about it, and I see people like 4 or 5 months down the line, they'll like pick up the thesis that I have about the company, right? Like not directly, but I know that they viewed what I posted and that they've taken that into consideration. So even with a very small sort of like body of water or sort of like body of conversation, that I am actually directing that conversation, which then in turn helps me. But again, it's because I was in early, right? Like if you're picking companies with like market caps below $1 billion, like your relative strength in directing value, even at a very small scale, is a lot larger than if you're talking about Nvidia, right? Because all everything I say about Nvidia during this stream is like it's probably said there's probably about 1,000 people who could say the same exact thing that I've said, right?
Yeah,
So it's very dilutive in the meaning to what I say. But if I bring up AMPL or KRT, very like uh, companies that are below $1 billion of market cap that I'm invested in, it's like, okay, well, you've never heard of that. So everything that I say, you'll probably take like on a narrative basis at a much higher like there's more meaning to it. So even though my position might be small.
absolutely. Well, with my companies I'm investing in, it's most like miners and so. And I really take a look at what it's worth. Well, the last couple of years it was pretty easy because everything was pretty much cheap and you got it for free. But if we really look at the numbers, like for example, I did a video once with AGMR, and I looked at what could the numbers be worth. Like they were trading at, let's say, $200 million market cap, Canadian dollar market cap, and they were looking at production from one of their mines. It was, if I remember correctly, 2.5 million ounces a year for 15 years or so, or 20 years. Now it was less, 15 I think. And if you do the numbers, it's actually crazy how much money they will make. Like their their all-in sustaining cost was $17. So for every ounce they are mining, they would make, let's say, $100. So $80 in pure profit times 2.5 million ounces, and that gets you the whole market cap of the company from one of their projects, and you get the rest of the projects for free with a massive land package and all the upside from mining and drilling. It's it's insane how much value you get for the market cap you are paying. But on the other side, like you have Nvidia, and it's worth already trillions of dollars, and you run the numbers, and they have to be absolutely perfect for the valuation to make sense. They are priced to perfection, and if they don't perform, the stock will crash into oblivion. So, if you have no idea what a company is worth and what you would pay for it, you have no idea if the risk is to the upside, if the risk is to the downside, if the price you're paying is good, if you should buy more in case of a crash. You are really like driving in the dark when you have no valuation for a company. And I don't believe most people have an idea
Well,
what
yeah,
something is worth.
no, and also like not only is value narrative based, but it's also just this is something I also kind of talk about on Twitter sometimes. I don't actually think anyone understands what I mean by this when I say it, but you also have to look at mechanical value, right? So if you're buying into like a mining ticker, right, like a junior miners, right? Like, and let's say the market cap is like 80 million, 160 million, well, whatever it is. Then not like the actual money you're making from the market is you're making money from institutions taking in large positions due to the price discovery that mining company has uh, sort of like brought into existence. So that means that the money you're actually making is not from the value of the junior miner. You're actually making money from the institutions buying the value of the junior miner, because you're like your equity position on a percentage basis, like when you buy shares, does not matter to the market, right? There are algorithms, bots, AIs that like they'll just distribute whatever amount of shares you buy very quickly. Like they know how to, like there's a whole like physics department in each bank and hedge fund that's like literally mathematically tuning like like a multi-billion-dollar computer to like extract value from the position that you buy. So you're not making money from the actual shares that you're buying. You're making money from what institutions are doing with your shares. So if you know that, and then you, for example, like you buy Apple or Amazon or Nvidia, you buy these companies. Like, what are you actually making money from? Well, you're making money from 401ks. You're making money from pensions. You're making money from institutions. You're making money from governments, even, right? That's where the actual liquidity that you can sort of exit out on the position on. That's actually where you're making your money. So you should not be concerned in regards to like if Nvidia is making like I just looked at Nvidia's earnings, like their free cash flow is around $70 billion according to their earnings. Okay, so even if Nvidia started making $0 tomorrow, like you how do you say, you still have a probably a valuation of at least around $60 billion. So you know that whatever you buy is still worth something. So you should not be concerned about like the sort of what Nvidia per se is doing. What you should be concerned about is like, okay, well, how many like you should be looking at birth rates, for example, right? Like how many old people are about to die relative to the amount of young people in existence, right? Because if those people die, then those 401ks, those pension plans, they all get liquidated. And if all those things get liquidated, that means that there's less money to distribute the position that you're purchasing. So if you're buying a forward PE ratio of like let's say 40 for like 40x or something like that, but a bunch of old people start dying at an increasing rate, well then the liquidity to be able to afford that 40 PE forward PE is much lower. So a lot of the people buying a lot of these large cap companies don't actually understand the value that they don't understand the money that they're making. They don't understand where it's coming from. They don't understand where it's going. They don't understand why they are able to be a part of that increase in value. But if you go to sort of the smaller side in relative value, sort of like where we are in regards to our sort of value portfolios, then it's like okay, well it's very obvious. Like for a bank to take a small stock worth $100 million to like $2 billion, that's chump change, right? Like that's easy. They could do that in a day if they wanted to. They've done it in a day, right? That's not something that's hard to do. They wouldn't do it in a day, but that they could easily do that within like 2-3 weeks. Like you've seen that multiple times.
Yeah.
So yeah, it's a lot easier. The and we're all small fish in a very large pond. So the like
Well,
that sort of sector of the market, I don't really care for.
you can actually see it. It's something that's really interesting. Most call it just the index phenomenon. Like if I put into an index, you will go up no matter what you do, because like if you look at company and company prices, um, you can, for most of them, you can see the moment they enter an index, because it just goes up and up and up, because you're putting a floor under all the demand. Like we in the US, we have a machine that's um, just putting. I don't remember the exact like number, but in the US, all the people that are just blindly buying all the ETFs, they are putting like $50 billion every single month into stocks you have no idea about just because they are in an ETF. And when you are in that ETF, you will get, like, if you're in the lower parts of it, you will get 2% or 0.1% of that $50 billion of buying every single month, no matter what you do. As long as you're not kicked out of big index, you will receive that money and your share price will react to it, putting a floor under it, putting a minimum demand to it. Like Nvidia has every single month 7% of the $50 billion of buying every single month. They can nuke earnings today and they still will get that 7% every single month from that $50 billion. So it's really hard to really crack those large caps in the
Oh,
indexes.
by the way, Nvidia did release their earnings about 17 minutes ago.
And
Revenue 68 billion. EPS was $1.76. Uh, Nvidia gross margin was 75%. Nvidia strategically secured inventory and capacity to meet demand beyond the several quarters. So yeah, see like, let me take a look at PLTR. PLTR kind of popped up based off of that. Look at Meta. Meta's up a little bit. Where's the SPY at? SPY's up. Yeah, SPY popped up a little bit. So yeah, that's
oh, they are up
that's good. I guess.
2.3% in the after hours. That's pretty good.
Yeah. No, they just increased their market cap by around $250 billion or
Yeah,
$125
it's crazy.
billion
Like
dollars.
the move is $2 in the chart, and the moves in the market cap, it's just billions of dollars. Like $200 billion. Are there even a dozen companies bigger than that?
I don't think so. I think what was it? Apple's the closest one because I know Microsoft is 3 trillion. Damn, I didn't even know that.
Yeah.
Google is almost 4 trillion.
But the crazy thing is like
Meta,
when Nvidia moves like 2%, that's the market cap of, I don't know, Spotify or something like that. It's actually insane.
yeah, and the percentage you can take from that is pretty low. So I like again, I don't really focus on those. I don't think like my goal is to find the next Nvidia, which of course can be difficult, but I don't like I after our conversation last week, I did some more research into my mining company because I hadn't looked at it for about 2 months, and they'd released two press releases. So I just went back and kind of like reviewed the thesis just to make sure everything was good. They actually announced like two new deals with a government somewhere in the middle Asia. So they're expanding their operations outside of Asia and other countries like South America and stuff like that. So, but I did some estimation in regards to value, and I don't know, it's probably around what was it? I think it was around $5 to $10 billion in price discovery over the next 5 years, and I bought them at a market cap of around 400 million. So like, not saying that that value will be achieved. I was being very generous in regards to my projection value, but like, okay, I like in order to do that with Nvidia, you would have had to buy Nvidia at like, I don't know, 5 trillion, like at a market cap of like 500. Was it like 500 billion or something? Like, good luck with that. Like, you
Yeah,
can't go back. You can't.
Nvidia really did something crazy. Like they went from 100 billion, 200 billion to like their right now their market cap of a couple trillion. But that's actually an insane move, and your odds to find those returns in small caps, they are just so unbelievably higher. Um,
Well,
in
there was a so someone made a really interesting tweet. He was like, I've been on FinX for like, was it 7 years? He's like, every 2 or 3 years you get a new wave of people because the people who made money are no longer posting, and there's a whole new set of people who are trying to make money in the market, and they all have their like really bad ideas that they put into the community, and people will follow it, right? That's why you see like all this like sort of altcoin chatter in cryptocurrency, like how that's like disappeared, is because all the people who made money stopped talking about it, and all the people who lost money are, well, they're working, they're making money to to buy back in. So,
oh,
and I know because I've been there.
that's a really interesting take. Like the cycle of people. I have never heard about that, but I can see how that's right. Like if you are getting a couple big winners, you are set for life almost. Like I saw one post 2 or 3 days ago from a guy that went big into some random small cap during the 2020 downturn, and he just like 40x'd his 100k into like 5 million, and that really sets you up for life. They don't need to do anything else. They can just enjoy life, put it into something safer, and do whatever they want.
Yeah,
Um,
you can just chill. So that's like why you have to be very cautious about the people that you engage with on the in like FinX, right? Like I saw all these people talking about like PayPal and what was the other one? It was like Zeta and
Hymns,
SoFi and all hymns,
Celsius.
all yeah, all these like sort of like popular tickers right now. Like I'm like, man, I've seen this playbook before. Like these are all people who've been investing in the market for like a year. It's like I've been doing this for what 10 years now, and like I've been like engaged with the community for probably about 3 or 4. So like I would be on my second cycle of people. So I see the new cycle coming in, and I go like, yeah, I've seen this before. Like you guys are not saying anything new. Like trust me, back in 2021, 2022, it's the same thing. They're all the same exact stuff. So
Yeah, absolutely. One thing I'm not really sure about is like I think my miners will do really well, like 10x or 50x, and I actually made a post about it today. Like for most of my positions, the the minimum I believe or I think I will get is like a 10x, and below that I don't think it's a success. And if I really hit a success, that will look like a 100x for me. Because when you are active in the small cap and micro cap space, you don't really looking for a 10% return over time. You are really looking for those massive gains, um, and it really needs a different approach to investing than when you're doing it with large caps. Um, when someone asks me like, what do you think your portfolio will do over this year? What do you think? Where will you end this year with your portfolio? It can really go from like I am flat for the year, or I am ending the year with like half a million to €1 million on my account. Like the span of possibilities where my portfolio can go over the next 300 days is just so wide that I have zero clue where I will end the year, and it can really go anywhere.
well, so this is also one of the reasons why I started doing dividend investing, right? Because I'm in the same situation in regards to my deep value portfolio. Like I can't. There's it's very hard for me to project out the value of that portfolio. Like I can make estimations, I can do calculations based off what I think a company is worth, and yeah, but it's hard to do that on time frames. So I could do estimation of value, but I can't necessarily do time like estimation of time frame, right? So with the dividend portfolio, I can do that estimation of time in regards to like relative to estimation of value. Like you can do that if you know how to run the projections properly, and you know at what metrics to look at. It's not going to be 100%, of course. Like so far in my experience, it's been higher than I had initially expected, but I imagine that that's not necessarily anything to do with the picks that I have, but more in to do with the market cycle, because we've seen sectors like cryptocurrency sort of like more liquidity heavy sectors sort of go down, so people are looking for that liquidity or protection of that liquidity. And since my dividend portfolio is pretty defensive, it's going to go up higher than sort of initially expected, and there's probably going to be a pullback once the market feels like it wants to drop some liquidity back in. So there's going to be a pullback there. So which I'm fine with, because again, it's more about dividend yield and yield on cost relative to the actual value that I'm looking for. But with my long-term portfolio, like a lot of people will say that it's a lot of people say like, oh, it's tricky to like make 11%. It's like you would only say that if you have never managed to invest for a long period of time. Like if you actually do the work, not in, like waking up every morning and just doing a DCA, which there's nothing wrong with that, right? Like if you're gonna do a DCA, wake up every morning, buy a company or cryptocurrency every single day, something that I do for like basically half of my net worth, then like yeah, you to get anything above 12%, that's a win. But if you do like actually active value investing, like 12%, that's a bad year. Like you did something wrong. Like you should be for the year you should be gunning for at least 50% gains. Like at least like and I say it's difficult because again sometimes you don't necessarily know when the plays that you're investing are going to take off because a lot of it has to do with sort of narrative psychology, cycles, all that type of stuff. So sometimes you need the right timing for that. But like right now on a 5 year time frame, my portfolio is currently up year over year above 40%. Like it kind of fluctuates between 40-50% year on year, which I mean, if I do the math on that, like over the next sort of 40 years of my life, because I'm 25 years old, if I do that till the age of 65, I think that's like some odd like $2-3 billion, which like I know is never that's not realistic whatsoever. But it's something that's something that I can kind of shoot for, right? It's like okay, $1 billion based off of my sort of history of picking winners and losers. I mean, if I shoot for 1 billion, I can land at 100 million. You know what I mean?
Yeah,
So
I completely agree with you here. Like my bullish cases, they are so beyond bullish that I have zero clue if they are even like if I'm talking about them, they would sound silly, like the dreams of like a toddler or something, because they are so unbelievably bullish. Like um, if you are going with silver to like $500 or $1,000, that's a 10x. When my portfolio just follows that, my money will go from 100k to 1 million. Like I'm invested in junior miners, so I will probably like do 5x that, so that's $5 million. When they are not really hot, when they are going into production and getting hot, I could see them doing a 20x or
yeah,
even
no,
more.
and
So the numbers just grow in a so fast. Like I buy them cheap, they go to loft, and I'm doing a ton of money. The metal moves up as well, like crazy. I'm doing even more money. So my visions for the future, they are somewhere between $500,000 on the bear case in 10 years or 5 years, and the upside is not even there, like 5 or 10 million. It can
yeah,
really go either way.
and if you tell people this, like yeah, I'm just like kind of what you're saying, like okay, just based off of what you could project out in value, it's like okay, I'm probably guaranteed to make $10 million. That's not it's not guaranteed, but it's like even if I do it slower than anticipated, like I'll probably reach 5-10 million at some point, just based off of my sort of understanding of the market. And if you tell someone, like if you tell a new investor that, they're like, how is that possible? Like, or even if you tell an investor that's like been investing for like let's say 4 or 5 years, like how is that possible? How is that possible? It's like you there's a lot of research that you have to do, and there's a lot of different forms of research you have to do. If you're doing dividend investing, then you don't have to do as much research. Like it's a passive sort of form of investing, right? So but if you're an active investor, right, like sort of a deep value investor, then returns of like $1 million, $10 million, like that's not ridiculous. That's not ridiculous whatsoever. Like if anything, it's almost like expected. But I think what a lot of people kind of struggle with is time frames and also comparison. At least that's what I've struggled with. Like because like I'll like if I compare myself to other investors, it's like even though I have like a really good history, like if I compared my statistics in regards to like results then I'd probably be in like the top, I don't know, 0.5% of investors, probably even higher than that, like zero point 0.3 or yeah, like zero point 0.3, I would say. You're probably somewhere in that ballpark, maybe even a little bit higher, right? But like if you say that out loud, like people are like, what is this guy talking about? But if you like have done the research and understand like what you're doing, like that's not ridiculous whatsoever. Because like especially with time, right? Like there's gonna be people who they've been in the market for 3 years longer than you, right? And those people on an exponential basis are gonna feel like they're 20 years ahead of you. And it's the same principle uh, in regards to just waiting for like focusing on your portfolio and with the time that you put within a portfolio. Like the even though that I've had a like 40% year over year return like at a minimum with my current portfolio, like my value portfolio, like yeah, I could say like I did that over 5 years, but like I didn't really see those like actual returns within the last 18 months, right? So now I have to manage the position that I'm currently holding, and then I have to go find new plays.
Absolutely.
So and what that might take another 2 or 3 years for those decisions that I make today to sort of play out within sort of the actual display of value within my portfolio. So even though right now I'm technically worth whatever, like it could actually be like 3, 4 times X that, but just based off the decision making. So it's all about being composed within your strategy, and also understand that you have to build your own strategy. A lot of people, they don't do that. They don't put in the time to research. They don't put in the time to build their own strategy. They're too focused on what everyone else is doing. And if you just focus on your thing, then like you'll make money. It's guaranteed, because that's what value within the market is. Value in the market is understanding that other people, it's understanding something that other people don't over a long enough time frame. That's all that price discovery in the market is. So, and where you find that, that's completely up to you. And I would say a lot to do with your personality as well.
Yeah,
Oh,
I'm with you on the. I have a similar like return chart than you do. Like I started in 2022 and I was flat for like the first 3 years or so. Just I was figuring out stuff. I was learning the basic like all the words. You are not aware of when you are starting like earnings, EPS, revenue, all that stuff. So I was really like learning the basics, learning the words, and trying to figure out how, first of all, what my goals are and how to reach them and how to make a lot of money. And I transitioned in 2024, early 2024, into the minors, and I was picking random companies. Um, so it took another year until I saw returns. That was simply because I was picking a lot of companies, trying to learn the space. So I picked also a lot of losers, and it took a year that to give the losers enough time to go to like down 90% or so. And it took the winners also a year to really grow in size. So after a year, all my losers were gone, or in a size that didn't even matter anymore, and I sold them. And after that 1 year, my return suddenly was like 80% in a year. It was crazy to see what my winners were doing, even though I had a lot of losers. And that
yeah.
year really showed me that I'm right with my thesis, and when it plays out, even half as good as I imagine, I will retire in a couple of years and be a rich man.
Yeah. So like to give sort of an example of this, like I'm looking at my portfolio, my deep value portfolio right now. Like on my silver miners, my initial cost was like a couple thousand. But if I look at the my most recent like position that I started, my it's almost like 3x my initial cost. So of the sort of the metals plays, So my starting position is now a lot larger, right? Which means that if I even get like half of the results that I did with the miners, then like the the actual return on investment is like way crazier. Even though that the metals idea is probably better, the actual return is better on my new plays, my newer plays. So because it just compounds at a ridiculous rate, and you don't even need to like put in that much. Like if you put 4,000 into a position and it turns into some odd $20,000, right? And then you sell half of it, whatever.
I have a
Then
story
you have
about
like
that. I have a story about that. Like in early 2024, I bought a company. Like it was Wiesla. It's junior miner in the silver junior miner in Mexico. I loved the presentation they did on one of the mining conferences, so I bought them. They were huge, and I put in $1,000. That $1,000 turned into 9k, something around that. They did a little spin-off, so the math is a little wiggly. But that 1k turned into 9k Canadian dollars. Um, it was a small position at that time, and many of those 1k positions they went to like 500 or $300. But now I sold them at an 8x, and I put the money with new money into new positions. And now those new positions they are bigger than what Wiesla was at the top when I sold them. Like right now I put them like in SSV.V, and I split it up a little bit. I can give it a return on that. I bought it in October. Um, I bought SSV at 0.37. They are now at 0.8, so I double in 5 months with that money. I put the money into AGMR. They are up like 20%. I bought as well EXN, and they are up 2 to 3x as well in that short amount of time. So those positions are already bigger than my winners that I bought in 2024, and that size is it's really about size. When those positions do another 10x for me, and I believe they will, um, the gains won't be 8k, but they will be 80k, and that's really where the compounding comes in very handy. And I'm excited to see what a 100k portfolio will do versus a 20k portfolio a couple of years ago.
yeah, no, I like same position. Like it compounds very quickly, especially if you're into. I'm like I don't know. There's just people that they think that this type of stuff is impossible, but if you've been in the market long enough and you like the uh, a good example of this is like I really realized a lot of this stuff, not even necessarily from the winners. Like I had early winners like Neo and the biotech company I talked about last time, where I turned like 1,100 into like 70 grand over like 9 months. Like I mentioned that on the last episode, but even on the losers, like I've or not even the losers, but some of the plays that I would have on my watch list that I would not invest in, right? Because I was hesitant or I didn't fully understand. Like this was early on, especially. Like I didn't understand the market, like and what it was doing or what it was trying to do with value and stock price. And there were plays that like I like when I would look at it, I'd be like, man, I hope to one day buy this stock. And then like a year later, it's up like 7x. And I'm like, well, now I don't want to buy it because it just went up 7 times from when I started looking at it. Like, I don't want to buy it now. Like, that's pretty dumb. Like, I should have bought it like back then. But even just seeing that, like with the plays that I would pick and add to the watch list, and like I would never have a watch list larger than 15 stocks. So like kind of like what you do with your actual positions, where it's like you find plays, you put a couple thousand in there, and it just runs up. Like I could have should have probably done that, but even then, like if you do that a couple of times, like you don't have to do that like all the time. You just have to do it a couple of times and do it a couple of times really really well. So and it just takes time. It just takes time within the market. Like it's something like this is a game you have to be dedicated to. This, I see people on X who like will post like, man, don't look at your portfolio every day. It's like don't look at it. What are you talking about? Don't look at it every day. You should be looking at it every 30 minutes. You should be
Yeah,
you should have at least spent one day looking at charts minute by minute, like straight up. I guarantee you the amount of people who have done. I've done that because I used to stream day trading, so I've actually done that multiple times, like probably well over 100 times, like from market open to market close with pre-market and aftermarkets, like minute by minute, like almost trade by trade. Like I've done that before. The amount of people who have not done that and then will post like, "Hey man, don't look at your portfolio every day. It's not good for your mental health." It's like I didn't know that this was the Harvard psych ward. I didn't know that we were like putting patients into a psych ward or something like that. Like that's not what we're here for. You're here for the brutality of the market. You're here to lose 80% of your portfolio within 2 months, and then having to sit with that and accepting like, okay, I can either quit this or I can continue going. There's a lot of people who have not done that. And how do you say? I wouldn't even say the portfolio, but positions. Like where you look at a position, like damn, I just lost nine. Like I've had that happen where like in after hours, like a stock goes down 90%. It's like that's not a good feeling. But I've experienced it, and like when I see a stock go up 10% now, it's like that doesn't. I don't feel a thing. 10%. That doesn't mean anything to me. That I laugh at that. That's funny to me. Like you there's things that you have to experience within the market. Like it's just like if you play sports, right? It's like if you play baseball. It's like okay, well you go up to bat. It's like well baseball is one of the hardest sports to play because of like the pitching and the batting. It's like yeah, but you have to take pitches. Like you have to take pitches. Right, so it's one of the reasons why a lot of rich people like love baseball because they understand that like you're not getting an like a 90% success rate. You're probably going to be batting a 200. You're going to be batting 20%. And the question is that 20% enough?
yeah, absolutely. And you need to know the risks you are taking. Like when I started investing, um, I knew I didn't know enough about the market to really go all in just a couple of stocks. So everything I knew when I started investing into small caps and micro caps was that the metal market will do absolutely amazing as the supply whole situation, supply demand situation was broken. And the other thing was the biggest wins will come from the junior miners. So I really combined both. I limited my downside with a lot of positions. Right now I'm have a lot less positions. I'm down to like I should count them, but I think it's like 30 positions. I have a couple other stuff outside of junior miners that I really like. Um, but right now I'm more experienced, so I can take less positions, and I'm still doing fine with the additional experience I gained over the years. Um, and it really will help over time with the returns I'm getting or I'm looking to get. And it's crazy that I can't even talk about how bullish I am on the stuff I own. Like
Well, why not?
it's insane, and I like to have realistic expectations. Like if I'm doing a 5x or so, and I hate time frames. I'm really bad at time frames. Like I I'm bearish on the whole market, like for a long time. I sound a little bit like Michael Burry if you talk with me about macro stuff. Like I see the how's it called? The financial system is in shambles and all that. Um, Macro talk with me is really like a bearish thing to do. Um, But I'm always wrong on time frames. If I say it's a month, it's like probably like a year or so. So I stopped really doing time frames because I know my thesis, they are right, and I will make a ton of money with them, even if the thesis needs like double the time I say. So I stopped talking about time frames, as it it doesn't really like help people to know the time frames when they are wrong. I switched to talking about systems, talking about stuff I see, talking about my thesis, and just leaving the time frames away. Like, I don't even care if it's a year, half a year, or 2 years when I'm paid 10x my money. It can even take 2 years or 3 years when I'm paid $1 million to wait. I don't care. So time frame has become a lot less important for me. Um, and the thesis in
Yeah.
itself has really put into the focus.
Well, so I think this is also something that people fail to really talk about in regards to the market is personality, right? And again, this goes. I keep bringing it up because the day trading had a big impact, but this goes back to my day trading days, where it's like if you watch a lot of these like how to become a better day trader videos, a lot of the things they'll talk about is like, okay, well, you have to figure out who you are as a person, and what they mean by that is like, okay, like how do you get emotional? And I would say this also applies to deep value investing. It's like if you if you buy $100 million market cap company, like can you hold that for 3 years and not care about it? Like can you do that? There are a lot of people who they can't do that, right? There are people who like they need to be in an Amazon. They need to feel like they are at the cutting edge of the market. They need to feel like they are investing with and against simultaneously 100,000 people, right? Or with Nvidia or Tesla or with Microsoft or Apple or all these big, like they feel like they need to be in the mix, so to speak. And if that's your personality, sure, fine. But like my personality is not like that whatsoever. My personality is very I'm a very diligent person. I'm also a very paranoid person. So with that mixture of diligence and paranoia, that like my capability of taking a company or buying a company that has a 100, 200, 300 million market cap, like I'm much more suited than dealing with like a $3 trillion market cap company, right? Because it's like it gets boring. It doesn't interest me. I don't feel the need to research it because I'm like, oh, it's a company. They're going to be making money. It's like cool. It's like, well, some people are like, well, the specific revenue of this department within the company is gonna it's gonna have knock on effect. Like I don't care about any of that. I care about is the company making money? How much debt do they have? Where is the hidden value within the earnings? That's what I care about because I'm diligent and I'm also paranoid in regards to value. It's like, okay, well, this if this $100 million market cap company like they say this about themselves, but really, if I look at it, then like I don't think they're actually. Like, I think they're lying. I think they're lying, and therefore, um, I'm not going to invest in this company. Or I'm like, well, maybe even if they are lying, like they still have this, and if they have that, then they can do this. So, like, it's really about understanding who you are as a person when it comes to investing, right? Like, I would say with dividend investing for me, um, like, and I would say the personality of dividend investors, or at least I would say that's more a part of my personality. Like, I'm also incredibly conservative. Like, if you like you talk about macros, I'm the same way. Like, if like I think we even talked about like this last time, where like we were very had a very similar outlook on sort of the macro aspects of the market, and we're talking like between like decades, not years, but like decades. But also simultaneously, if you were to talk to me about a specific company, like this is why like I'm terrible to talk about like Amazon with, because I'm like if I start looking at Amazon's balance sheet, I'm like this company is worth $20, and you'd be like, what? How is that possible? I'm like, well, based off of everything that I see, Amazon's worth $20 a share. I don't want to buy it at 200. Why would I do that? And like that's incredibly annoying for people who are like who listen to me talk about that. But it's like, no, that's how I view the market. So that's how my personality sees reality manifest. So therefore, when I go into dividend investing, like I can benefit from that because I'm like, okay, well, I'm incredibly conservative. So, and one of the most conservative forms of investing is dividend investing. So my personality aligns with the style of investing. Simultaneously, I can introduce a very conservative strategy within that conservative form of investing that I analyze with my conservative form of personality. And if you kind of line all of those things up, and this applies to different people in different ways, like you have a greater chance um, of succeeding because it's about competition when you're investing. So,
Oh yeah,
one sec,
absolutely.
brother. I'm gonna grab some coffee real quick. I'll be back in a minute.
Yeah, no problem. So right now we are just trying to get to max life, find a couple other hard crystals. We have 2 hard crystals to go until we are at 400, and then we'll gear up a little bit. I don't think there's much to do in the gear side, so um, we'll need to see. And then we'll build. Next time we'll build an arena for the early bosses, so that we don't just die like you saw with the last hour. Um, and then we should be good to go for the next bosses. Slowly going through the early game.
I've never played this video game. Is
Oh
this
yeah, back. Yeah, it's pretty grind heavy during the early moments of it, so it's really nice to just run around the world and talk. It's the reason why I chose it as the game to stream. So
Yeah, no, I get that. Like I'm more. I've played a lot of Minecraft, so
yeah, it's a little
when I
bit
was
like that, but
young.
different. More
Yeah,
bosses.
yeah, no, I like it is a very interesting looking game. The problem is I get addicted to stuff very quickly, so I try not to play video games, man. Because if I do, then I can easily spend 2 days like doing like just playing the game full
Yeah,
like
wasting time.
nonstop.
I see that.
I'm very focused on whatever I'm doing, so and sometimes I need it. Sometimes I need to like take a break from whatever, so I'll do it. But the like if it's grind heavy, I can't do it. I'm screwed.
Yeah, it's pretty grind heavy to get stuff you need. Um, and I saw one guy in the comments. It's C4 Papi. Maybe you know him. He's an older guy. Very interesting person. He's often um, in the space John is having at the Saturdays, and he's old, but he has a nice portfolio as well. Like he has 3 parts of it. Like one is income focused, one is more growth focused, and he's now doing a third one where he's going into the mining sectors, um, really trying to learn all the stuff. And he's also like listening right now, I think. It's cool to see people from every age how they invest. That's also playing a massive role. Like you can't invest the same way in your 30s or 20s than you are doing like in your 50s.
Yeah, no, I but like again, that kind of is one of the reasons. Like when I started at 20, I was in, like almost full blown risk. Like everything I did, options, like day trading, futures trading, like the type of investments I was taking, like just full blown risk. I did not care whatsoever because I'm like, if I lose it, then like who cares? It doesn't really matter. I can just go get a job and make more money and then slowly build back up. But now that I'm like mid 20s, maybe this is sort of like an early midlife crisis, but like that's why I started the dividend investing because I'm like, well, like maybe it's good to have something sort of like in the background that I can like slowly build that like I don't have to like I can just build uh, like income based portfolio in the background. I don't need to like fully focus on it. I can just set it up. So
Yeah, something I want to do. Um, maybe not. Well, I think I can do it right now as well. It's doing a little bit of like arbitrage with margin. Like right now, debt is getting cheap again. Like you, I could get a margin from interactive brokers for like 4 to 5%, and I could just put it into something a little bit more high yield and make.
well, so like this is just some calculated. Like I've been getting very into like the dividend investing. So like, and this is low end yield based off of the numbers you've given on your portfolio. You'd be making around on a 3.5% basis. You'd be making almost $4,500 a year just from dividend investing. So, which like how do you say that doesn't sound like a lot, and it's not because you also have to pay taxes on it and all that type of stuff, kind of depending where you live. But um, if you like something like this is an idea I had very early on when I started investing. Right, one of the reasons why I was so uh, like I was heavy on the risk is like my goal was to get to like 200 grand because but this is like like thoughts of grandeur basically. But when I was at around 20 or 30K, I was like, oh, I'll just 10x my portfolio, put it into dividends, and then whatever money I make off the dividends, I'll just use that to pick like deep value stocks. Um, and that was like kind of the initial goal was like if I can build something that's um, like if I can build a portfolio that can pay me dividends, like I would still work, but then I would have like sort of an asset that's allowing me to invest in other assets. And that's kind of the strategy that I'm like still trying to build up where like but instead of doing it where I do like one at a time, I'm kind of doing both simultaneously. So like where I'm building the dividend portfolio. I have it set up like it's on like a daily basis. I buy stock, so every single day I get an updated projection of what I'm going to be making for the year. Or I project about 24 months out. So like the first 12 months is like kind of taking in the shares that I'm buying, and then the second 12 months is me essentially projecting like what I would be making on a full year basis. But simultaneously, I've now started making a decent enough amount of money where I can. My goal is to slowly start increasing the amount of money that I'm buying on like a daily basis. So where like I can still maintain the capital, but I can slowly kind of put it into dividends. So because then I still have access to liquidity, but then simultaneously I would also be building engines of liquidity. So like that's kind of the strategy I have going, and I you haven't blown your portfolio yet, and I think with the strategy you have, you probably won't, because it's very diversified. You have a lot of sort of eggs in different baskets, so that's good. Because I was a lot more concentrated. I had like maybe 2 or 3 plays when I was making a shit ton of money. So, but
Yeah.
so I think your strategy accounts for that. But for my strategy, I don't like that. I like doing like 2 or 3 at the same time. So having a strategy where I can manage liquidity appropriately while building a dividend engine simultaneously. That's something I'm very, it's very good. Kind of like pays for itself essentially.
Yeah, I like to not just limit me to one thing. I like to really look at every possibility I get. Right now I'm not really comfortable going into big margins against my account because it's so volatile and I don't want to blow it up. But maybe when I in a couple of years I'm sitting at $1 million or so, I will just put 300 or 400k into some stabler things like Amazon or some ETF, and then I will put margin against it. So I will put like 400k into dividend stuff, and then I will add another 200k or 300k against it. No idea what I can do, if I can even get so much, but I will look at it and with like how much room I have to wiggle around in share price, and then I will just pay it off with dividends and get those couple extra percents that are the difference between the margin rate and the dividends I'm getting, or maybe some high yield ETFs like they are popping out everywhere, or I will just sell my own options on it to get that extra yield. Um, I'm not afraid of margins, but the math has to make sense, and I believe right now there are two things I will believe will help me with that strategy. Like the EZB, they will probably lower rates. I don't know if we see zero again, but 1% or so we'll probably see, and that will drop also the margin interest rate on interactive brokers. When I have the right data, I think it's like they take the EZB rate and they add 2.5% to it. So if it's at 1%, they ask for 3.5%, and I will surely do more with dividends than that. So that's an easy couple percent you can get, add a little bit of options to it. That's a nice addition to get more exposure and more money to work with. I think that's a nice way to go when I'm bigger.
Yeah, no, so I mean, there's a lot of different things you can do. Currently, like for example, a lot of my dividends I have in Robinhood, and if you have Robinhood Gold, you get free margin of 3,000, a free $1,000 margin. So you don't have to pay any interest on it. It's because the interest rate is around 4.5%, 5% or something. At least that's the expense of the margin. So, but because they do it, like I just basically just use it, right? And people are like, I'm against margin. I'm like, I mean, relative to my portfolio, like I have $1,000 in my deep value. Like if the market does tank 60%, I can just throw in 1,000 and save the margin. Like it's not. Plus, it's not a lot of shares. It's just I'm basically just getting an extra like $40 off the dividends from it. So, well, which then compounds like year over year, right? Because eventually that grows. So the yield on cost eventually, I would actually be able to afford more like a real actual margin. Because I also want to use margin because I know a lot of bigger portfolios, like once you cross into like the $250,000, like buying like $50,000 worth of margin, like even on interest, is like it's not a terrible idea because the amount of money you're making is actually significant. Like if you have like 300,000 in the portfolio and you're making like let's say 4.5%, then you're making, what is it? Whoops, no, not point. You're, well, my brain malfunctioned. Yeah, you're making like $13,000. So, and then if you convert that back into the amount of margin that you can take on, then you could have your portfolio paying for the margin, and then you could just be using that other extra, however money that is. Because let's say the rate is 5%, or let's say it's below that, it's like 4%. That means you can multiply that by 20. So you can take a margin of around like an extra like $150,000. So like 50% margin, right? Which wouldn't be terrible. So, and you would basically be able to pay that off. But that's just like some of the things you can do. So, yeah, I think margin, I think it's underrated. I do think that if you have a smaller portfolio, like anything below 200,000, like there's no real point of it. I like at that point you just have to put in the work, and I think a lot of people they get greedy. I've been greedy before, like, but there are other people like, especially when you first start, you get really greedy about the about getting past the first 100,000. The first 100,000 is the most difficult, right? Because like, if you're making 4.5% on $100,000, then like that's $4,500 that you're making a year in dividends, which that doesn't take you much to get back. I mean, you get it back over 22-year period, but then you still have growth and all that type of stuff. So, but that's just on the dividend side. Actually, so this is a bit of a self promotion. I've been building a dividend projection tool using Claude Code. So I'm planning on releasing that pretty soon. I've actually put it up online, but there's still a lot of bugs that I have to work out. Um, so eventually, people will be able to use that sort of projection tool to kind of do the things that I'm talking about right now. So, because I know it's a lot of math and people don't like listening to that. So,
Yeah, I believe that margin is something you can use, but you have to use it responsible, and it's a lot easier to use on a bigger portfolio. Like on a bigger portfolio, it doesn't really matter if you are doing like 1 or 2%. That's already a lot of money. Like if you are doing 1% gain on $1 million portfolio, that's already 10K, and that's where the real juice comes from. When you are hitting the big numbers in your portfolio, you can do very safe stuff and still make a ton of money with it. That's simply not possible with a small portfolio where you have to take a bunch of risk to get to the same amount of money. And I'm really excited to get um, to that size someday, as it will enable so much stuff. And like I will buy a house in, I don't know, 5, 10 years or so, and um, I will probably use margin to get my down payment. I don't want to sell anything from my portfolio, as I believe everything I will have at that time will have a reason to be in the portfolio. So I will use
yeah,
margin when I'm bigger.
so just for the dividend side of it, I'm currently making around $28 a month. Um,
That's
like
cool.
every Yeah, it's not a lot. It's like I've only been building the portfolio. I've only like really started building it about 3 months ago, but I've been adding to it for about 8 months now. So technically, 5 months. It was a bit complicated. Like I ran into some car issues, so I wanted to pay the debt of that first. Um, and then I also took a trip to Europe, so I had to spend money on that. So I wasn't able to consistently add the way that I wanted to. But now that I'm like, I haven't had any car issues and I've paid off all my debt, I've now been very focused on like just kind of edging that out a little bit. Like by the end of the year, that should be around $70 a month, which like that's not necessarily significant, but it's not like replacing a bill or anything like that. But like if I build that over 5 year span, like that's still pretty decent. I can offset some expenses with that every month, which I can then in turn put into the market. Because like my main investing strategy is the value portfolio. I think the finding those deep plays, if you can do it consistently, it's probably one of the better strategies out there. Because day trading is just you can lose too much money too quickly. It's there's too much. You can do stop loss and all that crap, and like, yeah, but you might have a month where you take two trades and you might lose both trades, right? So like, you might not make any money. There's no guarantee for that. But with like sort of deep value investing, you could offset half your expenses with one investment within a 2 year time frame. So like, you'll be basically paying for like a quarter of your living expenses within one investment. And if you have a couple, then you can really do that very quickly. So, but yeah, I also like. Do you work? Do you have a job, or are you still just university?
I am jobless. I am very fortunate that I don't need to work. Um, one of the, well, Luxembourg is crazy rich, and they are so small that they had for many years they didn't even have their own university. So the system in Luxembourg to support students is excellent, to say the least. Um, and my parents are, they are not rich, but they are doing fine, middle class. So I don't need to work. But I'm looking forward to work, as that's when the real money will hit my account finally, and I'm
What are you studying again?
I'm studying accountant, and I have a couple of courses about tech programming and all that kind of stuff. So a little mix of both.
Okay, yeah. No, oh, sorry about the dogs. I'm not sure if people can hear that. But yeah, no, like so, I would say that's very that's very focused. I know Luxembourg is pretty rich. Isn't is this true? I've read this somewhere, but you can confirm this. That like the amount of money that Luxembourg has is like they can almost pay for like their for the country's expenses just off of interest that they have based off of the assets that they own. Is that true?
I have no idea if that's true, but we are in the top three nations worldwide with like GDP per capita and in everything else that has to do with money. We are like top three minimum as well. But yeah, if on the other side, if you want to guess, like what's the average house price in Luxembourg for the whole country?
Probably like 2 million.
Nah, not that high, but it's like 1.2 million average, and yeah, so
Damn. Yeah.
that's pretty
No.
crazy.
Yeah, but I imagine that there's just like
Yeah, you have to like
just oper.
in America you have those people like, hey, just buy a cheaper house, like a house for 200K, that's enough to start with, and I'm like, for 200K, I won't even get an apartment. Like it's that
Damn.
crazy, and it's I'm studying in Germany, and when I'm walking around in the city, and like you know, the real estate companies, they have like their the place where they are working, and on the in the windows they have their newest offers, and I'm looking at some houses there and some apartments. I'm just like, hey, I could pay this in cash, and when I'm looking at the same stuff in Luxembourg, I'm like, hmm, can I even afford a down payment of 10% for that?
Well, I like again, and I think this is just like because that's kind of my goal. Like because in America is so big. Like even the county that I live in, the county that I live in is larger than like a lot of the countries in Europe. So I kind of get what you mean in regards to like there's just the options in America are a lot larger. But like I live in California, so like the expenses are a lot higher. But because I live with I still live with family that like my rent is basically pretty cheap. So the but because of that, I also make a lot more money. Like I make more money in where I live than most places like would make in 2 months. So like what I make in one month, other places they might not even make in 2 or 3 months. So it's not that high, but it's getting there based off of the job that I have. So if I look at it like that, then essentially what I realize is like if I can leverage the amount of money I make here in California, and if I save it and I organize it and I invest it well enough over, let's say, like a 3 to 5 year span, then if I move to another place in America, and even though my job and my income might not be as high, I still have enough money saved where I can offset enough expenses to where I don't even necessarily need a job that pays me the same amount that I get paid right now. So it's just like sort of like a relative thing, and I think right now that's like a very big thing in America is basically just um, making enough money, working in a place that like, sucks, and then like California's a awful place. It's an awful place to live. Like everyone hates it now, but if I can just work long and long enough in where I live right now, save it well enough, then I can offset like a quarter of my rent expenses for the year, which would like that dramatically improves like what I'm then able to do because I could get a job that might not even be as good, right? Or the income might not even be as good, and then I can make that work because well because it's all about the money that you keep, right? That's how you become wealthy. It's about money that you keep, not the money that you spend or the money that you make. It's just the money that you keep. That's the important part.
Yeah, I'm like, when I started investing, I saw like a lot of those stories about I invested for 3 or 5 years and then I retired. And the basic point that they never mentioned is like, yeah, they invested in and worked in like the US and then they moved to like Thailand or so and they retired there. So yeah, okay, that's fine, but you can retire there on like a 10% of the money you need to retire in the US or so, but that is never mentioned in those stories, funnily enough.
Yeah, the so because I work at a casino. I'm a bartender. I work at a casino, so I make a pretty decent living relative to some people. But I used to be a cook, so and if a cook makes way less, like I think it's almost you make almost 40% less. No, it's probably more than that. It's probably you probably make about 50% less than you do as a bartender. So, but the thing is that there's a lot of like Mexicans and Filipinos where they come to the states, they work, but because the what they normally do is they just move in together. So you have like a family of like five Filipinos, like five Filipino families. They all live together, so the rent is super cheap, right? They rent out a house, then they split that 5 ways. Sure, it's a little crowded, but like, and then what they do is they take their money, either invest it or send it back to their country, and they will like build a house. Because in the especially in the Philippines, Mexico not so much because Mexico is getting a lot more expensive. Plus you also have the whole cartel thing that like you don't a lot of people don't want to deal with. But in the Philippines, for example, like I think rent there is like 400 US dollars, like 400 or 500 US dollars, and um like food is like maybe $200, right? So like just the actual living expense to live in the Philippines is like it's like barely I think it's barely above $800. Like everything, insurance, all that. So now obviously you don't get like as good like medical care and stuff, but what happens is you get a lot of these Filipinos who will move over here, work here for like 10 years and then move back to the Philippines and they can retire. So or they whatever they're helping their family out. So you have like one of them working in the states, and then after a couple years they go back, and then they someone else comes over for a little bit. So there's all this type of stuff is kind of what people do in regards to the immigration. I think because I mean like I've worked in the back of kitchens like dishwasher, line cook, prep cook, all that type of stuff. So I've worked with a lot of these like a lot of immigrants like fresh off the boat, so to speak. And if you just ask them about how they live, it's like it's not, honestly, it's not terrible. Like, people will be like, oh, you need to move out, you need to live by yourself, right? Like, I'm a 19, I need to live by myself. It's like, yeah, I mean, you could do that, but there's also 5 Filipino families that are sharing a home, and like, because of the amount that they split expenses, like, they save like way more than someone who's making $300,000 a year, like, and is like the VP of a company or whatever. Like, it's all about the money you keep, like, just the basics, like when it comes to like working. But investing is kind of a different story, of course, because, well, how do you say it? You need to put in money to get money out. So, but when it comes to like, if you're working a job and you're like living with people is not a terrible idea. Like, or even living with your family is not a terrible idea. Like, people are, oh, well, that's not how it should be. It's like, yeah, but how do you say, 80% of the U.S. Dollar supply got printed within the last 5 years. So make up your mind, bro. This is a different age. Like, before COVID and after COVID's a real thing. We live in a different timeline. So you got to, there's different solutions to different problems.
Absolutely. There are so many different ways to go about how to achieve your goals, and if that includes working 5 years and then moving to the Philippines or Thailand or wherever you want, or into the nowhere in the US, that's fine. That's part of what you are building. But it should be included into your goals. Like, if you want to live in New York and retire there, you better have a lot higher um, money goals than you do when you are moving to Thailand. Um, that's just part of what you need to figure out where you want to go and how you're wanting to go there. Um, but it's getting pretty late here. We are getting closer to the 2 hour streaming mark. It's midnight in Europe. Um,
Yeah, no worries, brother. I still have some stuff that I need to go do anyways, so.
so I hope I hear you again next week, maybe when you have
Yeah.
time. Feel free to always
Yes.
join. It's always a
Yes,
pleasure
sir.
talking with you.
Hey, man.
So
It's
have a great day.
always good. You too, brother. It's always nice talking to you. Interesting market perspective, knowledgeable. So I always enjoy these conversations, man. So I'll see you next week.
Yeah. Have a great day, and everyone watching this, I hope you have a great end of the day or morning if you're from China. So I hope to see you all tomorrow after the close. Goodbye and
All right.
have a nice day.
Peace.